Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on exploring exciting opportunities in fixed income investments. The Monetary Policy Committee of the Central Bank of Nigeria has raised interest rates 6 times this year, a move targeted at bringing inflation under control, 33.8% as of October 2024, and encouraging investors to invest in Naira assets, which would support the exchange rate. The monetary policy rate has seen a notable increase, rising from 18.75% at the close of 2023 to a striking 27.25% as of November 2024. This substantial hike in interest rates presents a lucrative opportunity for investors in the fixed income market, where they can now expect improved returns on their investments. However, we believe that high interest rates are unlikely to last for much longer if inflation begins to decline and stability is restored in the exchange rates. Additionally, we think that the interest rates have nearly reached their peak. Therefore, we are discussing strategies that investors can adopt to take full advantage of this opportunity. Some of the fixed income instruments you can invest apart from fixed deposit include 1. Nigerian Treasury bills. Due to the significant increase in interest rates on Nigerian Treasury bills, we have seen sizable interest from investors, both domestic and foreign, with a total of 1 trillion naira subscription at last week's primary market auction. The 364-day yield at the Treasury bills primary market auction closed at 29.4%. while the 91-day and 180-day closed at a yield of 18.8% and 20.4% respectively. In the secondary market, the average yield for longer maturities closed at 27.5%. As noted earlier, this interest rate environment may not last until the end of 2025 if the macroeconomic variables improve. As a result, we suggest you invest in long-dated tenors like the 364 days, as a reversal in the interest rate will not affect you until the maturity of your investment. The minimum for investment in treasury bills is 50 million naira for the primary market and 100,000 naira for the secondary market. This may also vary across banks and investment outfits. 2. FGN Savings Bond. The federal government savings bond rates at the December 2024 offer for the 2-year and 3-year tenors closed at 17.5% and 18.5% respectively. We expect this rate to be maintained at the next auction in January 2025. If you invest in either of the two maturities, it means you would enjoy this rate for 2 or 3 years, even if interest rate comes down. The minimum investment is 5,000 naira and the maximum is 50 million. Interest is paid quarterly on a prorated basis. You can subscribe through your stockbroker. 3. Commercial papers. Due to the rise in interest rate on T-bills, the interest rate on commercial paper has also increased, hence making it more attractive. The average gross yield of a good rated CP is around 25% for 180 days and 30% for 270 days, subject to a withholding tax of 10%. Hence, we would recommend going for more of the 270-day tenor to take advantage of the higher interest rates than the 180-day tenor if you have the capacity to hold until maturity. You can also access CPs through your stockbroker or investment outfit. The minimum is 5 million naira, but some companies do set the minimum to 1 million naira. 4. FGN or corporate bonds. This is recommended for investors with long-term funds, as maturities can be up to 40 years. Savvy investors purchase bonds when the interest rates are high. The average interest rate stood at 19.5% as of last week Friday. For instance, if you invest at a yield of 20% for 10 years, this means that you would enjoy this rate even if the interest rate goes down to 5%. You may also miss out of any upside if interest rate continues to go up. However, it is unlikely to be significant given the historical trend of interest rates. The minimum in the primary market is 50 million naira and the secondary market is 20 million naira, or subject to the minimum set by your investment outfit. The interest is paid twice every 6 months. Considering the rising interest rate, which erodes the value of money over time, it has become increasingly important to pursue safe investments opportunities that promise higher returns. By actively seeking out such investments, you can help to preserve the purchasing power of your hard-earned savings. Embracing various strategic approaches, such as diversifying your portfolio and exploring Nigerian and US stocks, dollar investment, or other assets historically outperforming inflation, can significantly enhance your potential returns. These proactive measures not only serve to protect your financial well-being, but also lay the groundwork for a more secured and prosperous future. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send SMS to 070-82463747. Stay blessed.